as rates started to go up, this is 2022. Inflation shot up, and then the Fed started raising prices. Ross and I looked at a couple deals, and we're like, "Uh-oh, we have these loans maturing here in the next year, right?" So what we did is we did what was called a cash-in refi, and everybody's like, "What is that?" Oh, just like a cash-out refi, we actually paid money. It was a couple $100,000 is all to actually fix our debt. And so I wanted assurance through whatever was happening next of what my payment was going to be, because it cash flowed. So as I had a floating debt on that one, I was like, okay, we better do this. And they were moving fast, so it was a cash in refi. You usually do them for cash out refis, but in this particular case, and that point of that story is that there are things that you can do that are in your control, without selling. And so it was, in hindsight, look, it's a brilliant move that we did. And then we don't have to think about it later, and we can deal with this later. But we just want to make sure it cash flows for the long period of time. And thankfully we did that because prices continue to run, or interest rates continue to run. And the real estate market's a little bit in trouble. So that's what I mean by control.
And when you say the real estate market's in trouble, you mean multifamily?
Yeah, the values are down, and certainly income. The amount of rents are flat, and there's concessions and all that kind of stuff, and expenses are up. So right now we're working on the expense side again. That's within our control. We just had a huge insurance meeting last week, to talk about how do we mitigate our insurance costs and still comply with the lender. And so there's things that you can do, when you have a bunch of options, and you just don't have that, in my opinion, with stocks or Bitcoin or anything like that. You're just subject to whatever's happening.